Hey, hi everyone. My name is Joe Bladek. I'm joined with Sam Thompson today for Canadian Mortgage Weekly Live, episode 79 on Thursday, May 26, 2022. Really excited today, specifically because we're concluding our Property Investor Month, and Sam and I will be talking about the BRRRR Method in 2022. And so let's get started right away on this because we got a lot to talk about, eh, Sam?
Yeah, we definitely do. The BRRRR method is something I think we get asked about quite a bit, and we can't really do an investor series or investor month without chatting at least on one episode about the BRRRR method.
You bet. And we went in detail about it last year in quite a lot of detail to make sure that we explain to our property investors what the BRRRR method is. So if anyone is interested in the details behind it, check out our previous episode on the BRRRR method. Main thing today is to go over the BRRRR method in high level with you, Sam, talk about it, and also just chat about some of the nuances that we're seeing in 2022. But yeah, I guess the first step or the first item of the BRRRR method is the BRRRR method itself. So going over that, we got what the acronym stands for, obviously. Buy, rehab, rent, refinance, and repeat. Sounds like a laundry cycle, doesn't it?
Yeah, it does.
But anyway, this is an effective strategy for any investor that is looking to pick up multiple rental properties and increase the size of their portfolio over time. A lot of investors use this strategy to be able to recapture their original investment that they put into their first property so they can continue to do that for each and every existing property without losing their initial capital investment. It's a way for them to get that money back out. So, I know that it's a great tool that investors use, and the original amount can quite often come from, the equity in your home or even a line of credit. We see that a lot, eh, Sam?
Yeah, for sure. The financing, can come from, even we chatted about last week, buying an investment property with no down, looking at the refinancing route. But yeah, it's definitely a very common tool that I think we see a lot of investors that are wanting to get into, property ownership, investment properties, is going through that BRRRR method because, it's tried, tested, and true. With those 5 components to the BRRRR method.
Yeah. So with that, the 5 components, the first, what we'd like to start is the beginning. So when we look at the beginning of starting the BRRRR method here, we want to take a look at, what the start of the process looks like. So when we're looking at that, we're looking at purchasing a property, and especially in 2022, making sure that you find the right property. I know that a number of years ago, it was quite easy to find an investment property that was creating a cash flow. However, this time, this market, it seems, Sam, we're seeing a lot of property prices very high, which is causing investors to need to have a higher rent amount. And with that, it really impacts the first part of how the BRRRR method works and if it is going to work out going forward.
Yeah, absolutely. I mean, again, you want to be able to purchase a property that you can then invest in to appreciate the value. But exactly like you're saying, I know especially in the height of COVID, we saw some pretty fixer-upper properties going for, some might consider it a pretty steep price tag. So it's definitely been something to watch for. Or a change maybe that we've seen in the BRRRR process, since the pandemic.
You bet, yeah. So with that, one of the things we recommend is just making sure that as you're starting the process out there, you really watch for the property you're buying and making sure that when you're buying the property, it's important to get a good deal on it from the very beginning. A lot of investors have told me before, and we've talked about it together, Sam, that a lot of the money made in a real estate transaction is on the purchase side. So if you can buy at the right time, at the right price point, and as well as making sure that the house you're buying has enough potential or existing potential or future potential to earn enough income to be able to cover its expenses.
Mhm.
At least you're starting on the right foot, and just having the process at the beginning is really key.
Mhm.
But once you have that and you have your property, you've bought your fixer upper, you've rehabbed it, so to speak, and renovated it, rented it out, then you can start to proceed to refinance the property. So tell us a little bit about that, Sam.
Yeah, absolutely. So once you have, again, done the rehab, that might include some sweat equity, maybe a bit of updates on, property value increasing renovations. So things that are going to help your property value increase. I know a lot of times you see a kitchen redone or a bathroom, or fixing up curb appeal, and you have it rented. You're ready to refinance, where you can take out and cash out some of that equity that you've earned with a new appreciated property value. So again, that's where it is very important to price out the purchase appropriately for comparables once it's reached its end stage of the the renovations. Once it's reached the amount that you want to refinance off of, it's an important thing to consider for what you're purchasing to where you think you can take that value, and then you're ready for that refinance.
You bet. It sounds awesome, Sam. And then with that as well, when you have that capital taken back out of your property, you're ready to reinvest it into the next property yet again, to continue on the BRRRR method and doing it over and over again, just like that laundry cycle, rinse and repeat.
That's right.
But in terms of making sure that also that you're buying in the right area, with the market the way it is right now, we're seeing a lot of changes in the market. We're seeing a lot of areas have declines in price. A lot of areas are keeping their price. So it's important to be able to research where the areas are that have the opportunity for investment, and that can really be guided with a real estate realtor in that specific local area. But specifically, we've seen a lot of investors find cash flowing properties further up north, Sudbury, those areas, right, Sam? We've seen investors buy further west, so Windsor, Sarnia, and even much further east, less so, but that is happening as well. And we're seeing that in those areas, we're seeing a lot of those homes at a lower price point.
Yeah, there still is pockets available, at lower price points that are areas that, many investors, I know, again, when we chatted about the Windsor market on the update a couple months ago, there was expansion and investment opportunities popping up there. So you can still find the areas that, kind of fit that niche really well.
Yeah, you really can. And especially right now with the market the way it is, we've seen a few months in a row of declining growth. So, I mean, there's a lot of investors that are probably thinking on the camp that, let's wait and see how far this goes. But there's also the investors that I've been speaking with that are seeing this now as the opportunity, because, we've seen articles come out that Canada's heading into a buyer's market right now. Who knows how long that's going to last, and who knows how long these sale prices are going to be around for. We know that there's a lot of demand in Canada, and that's not gone away. It's just the rates where they're at, and how far do the prices need to go before they stop going further. I know that right now it's a great time. We're looking at November prices right now.
Yeah, exactly. November prices, houses getting much less activity or buzz. I know that we were chatting and have seen, on some, open houses, sorry, and, just properties that are available. It's quite for sale when you look at it in that regard. The days on market, the amount of offers that are coming in, we definitely could see, some way more activity from those investors as it's kind of hit that soft point.
Yeah. And that goes along to say, when we look at the market each year, we see that in the spring, we always see a decline in the prices. when all the listings hit the market. And then there's a slow appreciation back into the fall where we see that price growth take hold again. So we'll see if that continues on this year. Watch Canadian Mortgage Weekly. Sam and I will cover that on our, well, we're going to be covering prices on our episode later today, but we'll be keep you on up to date with that here on Canadian Mortgage Weekly. Once you got your area selected and your agent and you're working towards finding that right property, the next real final part of this BRRRR method would be to find the right lender and mortgage. And with these days, there's a number of things to consider with getting a mortgage in 2022, especially when lenders realize that you're a property investor. And one of those things is that even though you might have your property ready to go for a refinance and rent it out, some lenders do have some rules against refinancing within the first year.
Yeah, that's right. It's definitely, there is conditions and there is, that additional step and additional information needed on the mortgage side, even looking at the term, how it's set up, so that it's not, a long-term fixed mortgage that you're signing with that's going to have that penalty, maybe a variable if you're planning on breaking for a refinance.
Right, yeah.
There's some factors and things to consider on the mortgage side for that purchase so that you're set up to succeed and you don't get, kind of locked or in a bad scenario when you're trying to refinance and take all that sweat equity out.
Yeah, that's true too. So making sure that you find the right lender that accepts all the sweat equity, accepts refinancing within the first year, making sure that the term is correct. Like you're saying, Sam, fixed variable. You don't want to lock into a 5-year fixed mortgage if you're going to be refinancing within a few months to get your money back out. So make sure that your mortgage professional, whether it's myself, Sam, Terry Lynn, or whoever you're talking to, is working with you on this project, that they know exactly the type of mortgage you're looking for. And the BRRRR method can still be right for you in 2022. It's all about those 5 aspects that Sam and I covered there. And that's the BRRRR method itself: buy, rehab, rent, refinance, and repeat. Then we got, just doing all this the beginning research to it, making sure that you find that lower price point home. Making sure that you refinance right. Now on your next property, research that specific market, and then find the right lender and finalize that mortgage with the right terms. So thanks, Sam, for going over that with me today. And if any viewers have any questions about the BRRRR method in 2022, reach out to us or watch our previous video from last year. We went really into detail on the BRRRR method specifically, on how each of those steps works out. But now let's get on to the news, because there's some news activity happening in the mortgage market. I know fixed rates may see some changes coming up in the future.
Yeah, that's true. I mean, at the moment, we've seen things, remaining quite high. We haven't seen any major changes with that fixed rate. But when we take a look at the bond yield, we do notice that we are tracking a downward trend. It's been, like this for about 2 weeks now, from when we saw a peak bond yield at about 2.8. Now it's sitting at 2.6. And yeah, it'll be interesting to see how the fixed rate responds to this, as we're, noticing it's not just, a peak and valley, but it's been that gradual trend down. We'll have to see what the fixed rate response is to this. But I mean, for now, it looks like the fixed rate has remained pretty high.
Yeah, the fixed rate does remain high. We're looking at over 4% on a 5-year fixed rate mortgage right now for, someone that has great credit, great income, is purchasing well within their means. And, a 5-year fixed mortgage rate above 4% does mean a higher mortgage payment for those same houses that were for sale just months ago at a lower interest rate. But seeing this graph, Sam, I am seeing that small sense of a decline right now. I know that last week we reported that we would see where this trend is headed in the next 2-3 weeks. So I guess at this point, we have that trend. We're spotting it now. Perhaps next week or the week after, we'll see where this is going to head.
For sure.
Yeah, but if it does continue to go down further, then 5-year fixed rates will start to decline, which will be a great sign for the market.
Yeah, absolutely. I know that those high rates have really affected a lot of buyers and mortgage holders' decisions as that qualifying rates increased and having it, like you're saying, those high fixed rate payments.
Yeah, well, let's keep an eye on this in Canadian Mortgage Weekly. And if you're interested in making sure that you have a fixed rate mortgage at the best possible rate, contact us. We'll make sure that we monitor the rates for you and get your application in when the rates are lowest. And obviously, if you're pre-approved, you always get the lowest rate anyway. But let's move on to the CDOR rate. We use that to track here on Canadian Mortgage Weekly to see if the variable rate option is still a good option. I know that with the CDOR rate right now, it's still showing that variable is a competitive option comparatively to the fixed. We do have a lot of rate increases that would need to happen if someone did take a variable rate mortgage to reach the current fixed rate mortgage. What are your thoughts, Sam?
Yeah, absolutely. When we look at the variance of what the CDOR rate is versus prime, it definitely looks like a good option. And although we've seen the Bank of Canada increase their rate, the past couple announcements, as you mentioned, the variance from a variable rate versus a fixed rate is still quite substantial. So again, you're getting those savings on interest per payment. So it does look like it's still a good option. The CDOR rate has slowly been increasing, week over week, as we get closer to that Bank of Canada rate announcement. But again, the data is still showing us now that the variable is a competitive option for sure.
That's great news for all the variable rate mortgage holders out there. And yeah, if you are renewing, definitely talk to a mortgage professional if you're looking at considering the variable. And as far as the CDOR rate goes, we have about a year and a half left of CDOR rate reporting before the Bank of Canada does conclude releasing these numbers. So the Bank of Canada interest rate announcement, we have that coming up next week, June 1st. It's expected that we are going to have another increase. I'm anticipating possibly a double rate hike again. But seeing where the bond yield has been headed the last few days makes me reconsider everything I'm considering. And that seems to be the going sentiment in this market, always reconsidering what I'm considering.
Yeah, that's right. I mean, the past few rate announcements that we've looked at, we've seen some policies or commentaries from finance economists, and the information has swayed quite often. I mean, I know that at the very start of the year, everyone was calling for that rate hike, that rate increase, and we didn't see it for a few months. So again, the expectation is for another one. The Bank of Canada's overnight rate's only 1%. And I know that, towards the start of the year when different banks were, making their prediction or where they thought the overnight rate needed to be, many of them had 2022 ending off at about 2%. So, we'll have to track that as we head into the announcement next Wednesday to, see where people are leaning as we get closer to that rate announcement.
Absolutely, yeah. And join us here on Canadian Mortgage Weekly for a special episode 80. Can't believe I'm saying that, but 80 episodes in, we'll be announcing the Bank of Canada June 1st rate announcements. And looking forward to that. Join us for the pre-rate show as usual. Sam and I will be going over all the exciting data from past rate hikes and past rate drops, and we'll be trying to make this an exciting event for all Canadians on Canadian Mortgage Weekly. And then we got the national house price average. We've been tracking this for a number of months now. We did see that nice peak in February 2022 where everyone that sold did a great job. Now we're at that spot where house prices are at that level that we were at in November, which to me, like a lot of investors might take advantage of this as an opportunity.
Yeah, exactly. We have seen that softening, and if we're expecting it to just be, a spring sale, and if we're expecting those prices to, at least resurface or remain at that high level, then it could be, again, a good investment opportunity to take advantage of the sale that's going on now.
Yeah, exactly. I know a lot of people might disagree with that sentiment. However, we do see that every spring there has been some sort of a drop with an increase. So it could very well be that this month might be the last month of price decline. We'll have to see. Watch out for next month's episode of Canadian Mortgage Weekly. We'll have that new price data coming out probably on episode, I'm guessing 83. You're very ambitious. I was going to say 84. Let's do 83. Let's do episode 83. But yes, talk to your real estate agent. They are the folks that are on the ground floor and really help you with this data and analyze it more on a local level. Obviously, it's something that we are looking at a very average national level here. And yes, as we conclude today's episode 79, just wanted to take a moment to thank Sam Thompson for joining us today. Sam is a mortgage agent based out of Barrie, Ontario. He's originally from Ottawa, lives with his wife and puppy in Barrie. Always great to have you on the Sam. You've been in the industry now for over 2 years. So thanks for your knowledge and expertise, sharing it on today's episode.
Yeah, thanks so much for having me. It was a good episode and a good conclusion to Investor Month as we chatted about that BRRRR method. And again, for anybody who doesn't know you, Joe, you've been in the industry for over 11 years. We're creeping up to that 12-year mark, but lots of knowledge, especially with investment properties. So again, thanks for sharing your insight on the BRRRR method and going over these market stats with me.
Yeah, for sure there, Sam. Thanks to all the websites that always report these market stats for us. Big kudos to them. And yes, join us for next week's episode 80, pre-rate show and the Bank of Canada interest rate announcements. We do also have a episode the following day, episode 81 on Thursday, regular schedule program, where we will start to introduce mortgage products and the different mortgage products available in Canada for June 2022 will be our month theme of different mortgage products. So really looking forward to chatting about those with you, Sam, as well. And thanks for joining us today on Canadian Mortgage Weekly, Canada's weekly mortgage video news podcast. And we'll talk to you all